Hello and good morning. I welcome you to the morning meeting today on Thursday, the 5th of April 2018. This is Jens Klatt speaking and exclusively presenting this format to you here for JFD Brokers. We want to have a look at the markets and how things are developing here. As you may have seen, the DAX, respectively equity markets in general, are not selling off sharply anymore, but instead reversed sharply. And the DAX really jumped back above 12,000 points yesterday, mainly driven by the US equity markets. The thing is, don't ask me why this happened. So to me, it's very, very difficult to find a reason for that. To be honest, I think there's plenty of reasons to be very, very skeptical about this performance. I think what also can be seen is that the volume with which the market shot higher here, Dow Jones in this case, yesterday, for example, dropped, and that's usually not a very positive sign, seeing such a huge rally here. In fact, we are now something like 1,000 points from the lows from yesterday in the Dow Jones higher. And so let's first have a look here. For example, let's have a look here at the performance in the DAX. This drop on the downside, this push lower, that was mainly driven by the fears around tariffs from the Chinese, especially against the agricultural sector in the US. Therefore, let's just have a look here. Let's have a look here. I've shown a chart in the German version of the morning meeting here, which perfectly illustrates which came as a surprise, or what came as a surprise yesterday. So here, there you can see China is the main destination for US agricultural exports, accounting for nearly 14% of US exports in January till November 2017. And China is a key buyer of sorghum, respectively soybeans. And in this context, the tariffs on soy beans, for example, potentially hit the US economy hard, or can hit it hard. It doesn't matter. It doesn't necessarily mean that the US economy will dive into recession only based on that. I think this is way too much to expect. But nevertheless, it's definitely something which potentially drove equities lower yesterday. There was also, nevertheless, something which somehow was giving this some positive, or what could be seen positively. Let's put it that way. That was that the Chinese didn't set a fixed date here on which those tariffs will be implemented. And that was also something which was then brought up from Larry Kudlow yesterday. So therefore, here, have a look at the new chief economic advisor. By the way, this is a German article on him. Probably let's switch over to English here in Wikipedia. So it's only that you have a picture of this guy. And Larry Kudlow is, as you can see here, director of the National Economic Council under US President Donald Trump. So he's the predecessor here of Larry Cohn, who resigned last month, if you remember. And where we've also seen a drop on the downside, which was aggressively reversed then, and the equity markets were driven sharply higher. So, however, Kudlow himself also was somehow down talking those fears around a trade war between China and the US here. But nevertheless, I'm somehow a little doubtful here to really see this as the main driver for this bullish move here. But however we put it, the thing is, in the morning there was someone whom I had an email chat with, and he said, "Well, what about going short the DAX? Would you go short the DAX currently?" And I said, "Well, in fact, I can fully understand you, and yes, I prefer short engagements intraday today from pure gut feeling. But the thing is that I wouldn't trade it very aggressively. And this is the main reason for that is because this reversal here is showing some significant strength. If you look at the daily chart, we can't really talk about a so-called power candle here. So a power candle is something like that. That's a power candle on the upside here in green, or this one on the short side here, opening and then just selling off sharply, showing a big red body in this case, and then closing in the region around the lows. But it's similar to that because we've seen this aggressive reversal here. Look at the, I'm sorry, that's Deutsche Bank here. Look at the performance against the 200 simple moving average in Dow Jones, for example. So all in all, there's a very strong sign. There's big buyers coming in. Again, the volume did not show this, but nevertheless, the candle speaks such a language. And that's usually a sign that even if you say, well, the market seems to be quite extended. Therefore, let's look at the hourly chart here in the DAX. It looks extended. I'm 100% on your side here. Nevertheless, the thing is that such an extended mode does not necessarily go hand in hand with a sharp sell-off again. That needs definitely a driver, a trigger event, and I can't see such a driver, such a trigger event right now. And that said, I think for long engagements based on this extended mode here, yes, it's from a risk-reward perspective quite unattractive to be on the long side. Nevertheless, on the other hand, it's not very likely that the market will now collapse here. I mean, let's take out here the possibility that it will be an external driver and that the market will then be driven significantly lower for whatever reason. But the thing is that from a risk reward perspective, long and short engagements seem to be unattractive. And so I think it's quite nice to see that at least here the breakout of this open range hasn't been that significant, showing that there's not enough demand building so far. But nevertheless, the market can also find some support here on the downside when it starts to correct some of those gains. And I think the most positive outcome we should expect for today, my personal opinion, is that we probably will close the gap, if at all. So retesting the region around 12,070 points, and then probably consider this to be a potential long trigger and probably going higher from here again. But all in all, I'd say so far it doesn't look that promising for the bears so far. I mean, sure, we have to wait what the US equity markets will deliver and if this is really a sustainable move. I mean, again, if now the White House counters the those tariffs from the Chinese, mainly due to the fact that they're probably a little surprised by the focus here on this agricultural products into here, soybeans. I mean, that's definitely something to consider, but so far it looks as if the DAX in this case can make it out of the week above 12,000 points. Nevertheless, probably the most volatile trading event has been already seen here, and we shouldn't expect too much today, but also tomorrow here. And so that's it, in fact, from my end. So intraday, if we make it back above 140 here, if we break below the 50 exponential moving average on a 5-minute time frame, probably we have further room down towards 12,070 points. But I think so far I'm not seeing further drivers for further downside action then. The picture in the equity sector, in the currency sector hasn't changed, at least not for the Euro USD. There probably tomorrow NFPs can change something, probably give us some kind of volatility. Problem here is that ADP came in better than expected yesterday, as did US non-manufacturing came in below expectations. So it was mixed data sets which hit the wire yesterday. But all in all, I have to say, it doesn't seem as if there is big volatility to be expected currently, at least in the Euro USD. It seems that volatility will diminish here and that will stabilize and see quite neutral price action here over the next hours, but also probably tomorrow, even though we have the NFPs around the corner. I don't think that this will dramatically change the overall picture. Let's see whether it will be a little different here in the currency pair dollar Japanese yen. There it seems all in all as if there will be at least an attack around 107.50, 108 probably on the upside. So far we made it back above 108 after the first the losses yesterday, after the announcement of the Chinese of those tariffs. We recovered sharply and now pushed back above 107. Nevertheless, also if you take a step back here, you can see that the overall picture is still very neutral. meaning that everything between 105, 105.50 and 107.50, 108 should be considered neutral. If we break out on the upside, then we have probably further room to 110.50, 111. If not, and we find resistance here, probably we see a more significant setback, but all in all, the overall picture does not look that promising. It looks overall quite choppy. The same is true also for gold. If you look at gold, so yesterday we started out quite strong, and it looked really as if we are about to see the next quite aggressive attack around at the region around 1,360 to 365. But then sold off when the risk aversion just flew away, let's say, and now we are pushing back. All in all, the picture hasn't changed in gold. I'm still quite positive. I'm still positive enough to say rather sooner or later I see the attack around 360, 365. If we break above that level, that's a clear bullish break and shouldn't be faded, but we should expect further momentum on the upside to come then. Nevertheless, everything below that, respectively everything above 1,300 here, 295, 300, is neutral, should be considered neutral, and don't expect too much action to happen here, and let's wait for impulses. I personally say most likely on the upside, but let's see. And yeah, so in fact that's it from my end. I wish you happy trading. Watch your stops. Talk to you again tomorrow, 9:30 a.m. GMT, to the morning meeting. Take care. Happy trading. Watch your stops. See you, and bye-bye.